You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals, funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
Good morning, Quasar Markets Live. Thanks for joining me. I am solo today, but I am pumped up and ready to go, although the market's not really the same from what we're seeing, but it is shaping up to be a blockbuster for sure here. Across the globe, we're definitely seeing bond markets getting rocked, rising up. VIX rising up. Equity futures are definitely in correction mode. Gold and silver just blasted to new all-time highs. And we're watching two major corporate stories, Kraft Heinz splitting in half and Klarna aiming for U.S. debut. Meanwhile, CoreWeave's AI infra ambitions are colliding with Core Scientific. PepsiCo has an activist at its doors, and the EVs are starting to surrender their rocket fuel, and that's just a warm-up. I've got your full breakdown, the color, the context, the nuance. Stick around because the next hour we've got all of your markets, macro, corporate drama, and even a peek into AI, infra, and crypto. So let's get ready to roll. Grab your coffee, tea, or whatever else you need. Let's get ready. It's going to be quite a ride this morning. There is a lot going on, and the markets are definitely moving. We're going to start in the bond market because that's sort of telling the entire story. Let me get my chart here over to the 30-year. And as we can see, the 30-year up at 4.979. We actually are seeing it make a little bit of a decline here right now. So hopefully that will be the case, that we see it start to pull to the downside. But bonds have been heating up tremendously today. 30-year, like I said, almost broke at 5 or got directly up to 5%. That is a very critical level to keep in mind here. The key points so far have been the tariff refund risk. If you don't know, a Federal Circuit of Appeals court in a 7-4 decision decided to declare that most of President Trump's tariffs, those imposed under the International Emergency Powers Act, those are illegal, asserting that only Congress has authority for sweeping levy actions. So that definitely has markets moving today. Without a doubt, we see that. Give me 1 second to fix something on my screen here. There we go. Now we can share properly. There it is. That's what I was looking for. Again, however, keep in mind that that ruling is stayed till October 14th, giving the administration time to appeal to the Supreme Court, and they have expressed that that will be what happens. Why does it matter? If the decision ultimately stands, the U.S. may have to refund hundreds of billions collected since April and need to issue fresh debt, pushing these yields higher. Although I did see on CNBC, they talked about that would not only just be probably what does not happen, but also the fact that it'd be impossible because the tariffs aren't paid for by the individual countries. They're paid by the companies that imported stuff, so that it would never be able to get done from a logistical matter either here. And, the core congressional power to impose taxes such as tariffs is absolutely supposed to be vested exclusively in the legislation branch. That's what the Constitution says. So we'll see how that plays out. Putting the numbers in focus, like I said, the 30-year U.S. Treasury yield right now, 4.977, was at 4.98 and is chasing that key psychological 5% level. I think if we hit that, we'll see more fear in the markets today than we're already experimenting. And as I said, right now, the NASDAQ set to open down about excuse me, 1.6%, the SPY down 1.2, the Dow down also. So we're still seeing that. And, 10 years at 4.29, they had gotten below 4.2. So that's a big move to the upside also. And the 2-year at 3.65. And as we know, what that also ends up doing is affecting the yield rate. If we look right now, you can see how that yield rate is steepening and also widening, which is a problem. And what I'm talking about when I say that, that is the spread between the 2-year and the 30-year. And what it is showing is that investors right now have more faith in short-term stability than longer-term stability. And that is in general a problem. Tick, as we're sitting right now, is negative at 260. Advanced decline down about 2,700 here as we are about 20 minutes from the open. The DXY has regained 98.40, so a nice move to the upside here today, really taking us from those scary levels. We got down, I will say, we got down to that 97.56 that Mr. Flanagan talked about. We even wicked below it briefly yesterday. It's, but we have nicely recovered since then. So we are seeing the dollar pick back up. And as I mentioned, NASDAQ set to open down about 1.5%, the SPY down about 1.4%. So we're continuing to see slides across the equity markets this morning. We still have the Fed independence in the spotlight with political pressure continuing to go around the Fed's independence. It's becoming a key market risk. A hearing on Trump's attempt to oust federal officials is scheduled for September 4th. So we got it on Thursday this week. And long duration bond traders are starting to price in a risk premium there. And it's not just the U.S. that's seeing it. It's a global bond rout. UK gilt, which is Great Britain's 30-year gilt yield, soared it to 5.7%, highest since 1998. We also saw French and German bonds at 14-year highs. The narrative remains the same across the globe, which is why I do think we're seeing very much a risk-off attitude, is that this fiscal fragility meets rising term premium. As you know, it's a flywheel effect. As these bond rates grow, as treasury rates go up, it means that the amount of money needed to service our debt, not just ours, but all these countries, grows. And it's, we're seeing it. Bond markets globally are not just whispering, they are shouting that deficits and political uncertainty are a volatile cocktail. Look at it. It's a clash. Like I said, it's a vicious cycle. Weak fiscal credibility leads to higher long yields, leads to more fiscal pressure, leads to even higher borrowing costs. Once you breach that 5%, the optics start to get really rough for sure. Good morning, Marilyn and Ron. And yeah, Marilyn, I'm sorry. Yeah, we are learning a lot more about tariffs than we ever wanted to know about. And it really is the driver in the market right now, without a doubt today. And as I said, the other problem is that these bond rates are really leading to this flywheel approach where it's just going to continue to be, exasperating the issues across each other. Not only that, but equities are coming into fear and seasonality issues. So as the bonds lurch a little higher, equities are definitely turning cautious. Like I said, Q's down about 1.5%, SPY about 1.1% as we're hitting it. I will say VIX, I've been screaming at the top of my lungs, I think, as much as I can to get your VIX protection before you needed it, right? I even told you I was buying 1720s, at $19. Right now we're almost at max profit here. I mean, I bought 1719s, right? Hold it one second. I bought 1720s, so not all the way to full profit, but we're pretty close here already. And this is what we'll do. I'll sell those off today, especially on any kind of pump at the open, and then I'll be looking to rebuy them as it calms down. You buy VIX when you don't need it, but those things are slated to open up. If you followed in and I gave you what we were buying here, slated to open up about 66, 70% here this morning. So VIX calls are the way to go to hedge against this volatility. It goes both ways. Historically, September is one of the worst months when it comes to stocks. So the fact that it's opening in the red, has to have you a little bit worried about it. S&P 500 declines in general have been about 0.7 of a percentage point or 70 basis points on average, worse in post-election years, which is what we are in. But I will point out that when the S&P is above the 200-day moving average going into September, the average return flips to positive. And guess what? We are well above that 200-day moving average. So I would have to ask you folks, do you think that, September swoon is coming, or is there a real divergence between historical averages and the current setup because of how strong the markets are going into the month? Okay, as a macro backdrop here in Data Watch, I did mention already fair and gauge back above 17. And historically, September is the worst month for stocks. Today, we do have some important data on track. We have the final S&P manufacturing PMI at 945, and then the ISM manufacturing construction spending at 10. So a little bit of manufacturing data today to keep an eye on. The next real key catalyst, though, for me will be jobs reports on Friday, which will be non-farm payrolls. It will dictate perceptions for the September Fed meeting. Remember, that will be September 16th or 17th. So if you think we've got volatility right now, get ready for what is coming. We just said the 14th is most likely when we get the next news about tariffs, and that rolls right into the 16th and the 17th, which is when the Fed will meet. Tighter data equals a steeper curve. We shall see what we get. I'll point out we went from VIX at multi-month lows to triple-digit jumps in spreads. That's stress emerging in real time. The soft landing narrative isn't thrown out yet, but it's definitely hanging on just by a thread. And let me know, you guys bracing for a sharp pullback this morning? And do you think there's anything that buoys the market here before we get into farm payrolls, or are we just waiting for tweet analysis? What do you guys think? We are 12 minutes from the open. Advanced decline still at that negative 2,700 area. As I said, SPY about down 1.12%. QQQ, or the NASDAQ 100, down about 1.52% as we head into the open. VIX sitting at 18.9. And I do think commodities are telling us a good story also about what's going on in the markets. Gold and silver both hit all-time highs. Investors are definitely talking more than just fixed income. Hedges are flying when it comes to gold, flirting with new records. Oil is bouncing on the geopolitics and OPEC plus talk. We had Peter Thomas pipe in on Friday, talked about it. Central banks are holding more gold than US dollars for the first time in 33 years. And front month gold futures top 35.70. Right now, they're sitting right about that 34.82 neighborhood as of this morning. And silver has also been very strong with futures above $41 and current pricing at $40.40. The flight to safety and the long end yield volatility are definitely showing, as Peter Thomas talked about, that central bank buying and the talk of tariff refunds and fiscal stress definitely have gold in the driver's seat. A quote from Swiss Quote analyst said, gold is benefiting from a move away from U.S. treasuries as global wallets seek safe haven beyond just yield. We do also see a lot of the top moving stocks here this morning are the mining companies. TMC up not as much as it was earlier, but SSRM up about 3% here this morning. Newmont up 1.18%. And there are a few of the others here that are the mining companies. We did see most of them moving to the upside so far this morning in the pre-market. So it's not just gold itself, which is, as I said, was above 3,500. It has pulled back pretty sharply here this morning, as we have seen a little bit of profit taking there. And then silver, as I talked about, got almost all the way to 41. Steve's been calling for 42, so he got real close to his spot there for sure. And Marilyn, I definitely think we see more of a pullback today also. I'm with you. Crude oil, we do see, again, WTI inching up, trying to break through the 65 level here, up about 75 basis points today. Brent oil, or the heavy crude, up about a half a percentage point, also threatening to break above 68.50. Russia's oil processing facilities were hit by Ukraine strikes over the weekend. And the SCO, which was the Shanghai, I don't remember, commission, I forget what they were called, but basically India, China, and Russia getting together in Shanghai over the weekend. Again, those discussions are raising geopolitical spice. They definitely, they wanted to show to the U.S. and to the president that they are more unified than we probably thought there. So that is definitely something we have to worry about here, without a doubt. Yeah, I think we've hit on enough there. I don't think we got to go much further into it, but that is definitely what we're seeing. A flight to safety, whether it be gold, silver, crude, commodities in general. Bitcoin not being the huge proponent of that, although it has moved up over the last 2 days better than what we had been seeing with others. Had regained 110, got up as high as almost 111 before pulling back pretty significantly here. So similar to gold, after making the move up, we have seen a sell-off there. So we've seen total risk off, where people are taking profits on their gold, silver, crude, and Bitcoin here this morning also. So again, that leads me to believe we're going to see much more risk off as we start to get into the market hours here. We're about 7 minutes from the open here. Not much of a move of anything. SPY and Qs moving even more slightly to the downside. Before we open, let's talk a little bit about what's going on here. We got Kraft Heinz has announced that they are going to split up. There is a new co-plan. There's going to be basically the Global Taste Elevation Group, which is Heinz, Kraft Mac and Cheese, etc., valued roughly at about 15.48 billion in 2024 sales. And then the North American Grocery Division, that's going to be Oscar Mayer, Lunchables and Kraft Singles, about 10.4 billion in sales in 2024. Why are they doing this? Capital allocation clarity, brand focus, potentially unlocking shareholder value after years of integration complexity and margin pressure. And through a historical lens, keeps in mind that KHC is the product of Berkshire Hathaway and 3G's 2015 mega merger, but sales have underwhelmed almost since the start, and share prices are down 60% since that merger. They're trying to return to their roots with better clarity baked in. I don't argue. I think they need to be more laser focused. I think sometimes, while we talk about economy of scales and merger and acquisition being important in certain areas, sometimes you get too big and too unwieldy for even your own good. This could help them try to move forward here. Klarna has an IPO they're talking about doing here this week. So the Swedish fintech files to raise up 1.278 in a U.S. IPO trading under KLAR, expected to open up at around $35 to $37 for 34.3 million shares in primary and secondaries. We'll see. Global appetite for fintech has been there. But with the microwave sort of switching here, I do wonder whether they will have the same explosive move that we saw out of Circle, Figma, and others. I personally am not a huge fan of Klarna. Not negative on them. I just think that they're in a very crowded segment as opposed to what we saw with Figma or Circle, who were not in a very crowded segment. So we'll see what we get here on those. I see Ron just put something we were about to talk about into the thing here. Let me find Ron's. And what Ron was mentioning there is a nice move up by Pepsi, and that is what's our next segment here. It's not just about restructuring, it's about activism, some cost discipline, and infrastructure deals also. We've got Elliott Investors versus Pepsi, GM's EV adjustments, and a little bit of drama unfolding between CoreWeave and Core Scientific here that is going to matter. So we do have a bunch of them there, Ron. You are right for sure. And the news is that Elliott Management has built a roughly $4 billion stake, one of its largest ever. They say that PepsiCo is struggling in beverages, food unit under pressure, and that there are some potential share price catalysts, include refranchising bottling or spinning off segments. Similar strategy that succeeded with Honeywell with Elliott Investment, activists perch and management responds. We'll see if that's the case. I had someone ask me, I couldn't remember who it was recently, about Pepsi, and I had said that they are definitely not set up the way they are currently designed for much success. And again, they did take a nice move up on this news, but this is a stock that's been under a lot of pressure. Did trade as high as 183 back in June of last year. And as we've talked about, another one that's just been on a steady downswing over the last couple of years. It has picked up here off the bottoms, but again, nowhere near it where some other things have seen gains. I like this move by Elliott. I do think that Pepsi is another company that probably needs a refresher, and probably a big one, personally. So I do think that it's a good move. A lot of talk this week about EVs And it's sort of a tale of two things. For um, dealerships, it's a pretty positive time right now as people are running sort of into buy EVs while you are in the last 30 or 28 days, I guess, here of the EV $7,500 discount that you get. That is going to be going away at the end of the month. So we are seeing a lot of pickup on EV, especially when it comes to leasing. But keep in mind that the backdrop to this is that GM is slowing production at its factory zero, laying some people off, and it's going to affect their Escalade IQ, their Hummer EV, and their Silverado EV also. And what they are finding is buyers are scarce at that 100K level. So we'll see what comes out of it. The market is open. We'll get back into my notes in a little bit here. Let's see what we get off of the open here. First move is to the downside. We see the Qs now down 1.73% here. So again, moving to the downside to start off with. Still sliding down. So first move tick negative 600, advanced decline minus almost 4,600 here. So pretty big move to the downside overall here. Still negative 470 here. So definitely profit taken across everything. See what's happened. Metal company has gone negative now. So again, we're seeing profit. Same thing, SSRM. So all those gold miners getting hit real hard here on the open, definite profit taking across them. Pepsi holding up pretty well. So far, Pepsi holding up pretty well. Everything else, sale point moving back to the downside. Zero scalar that had been up in the pre-market now down almost 1 percentage point. Watch out below. Looks like we are going to see more slide here. Tick negative 500, advanced decline minus 46. If we look at the Mag 7 here, everything, wow, NVIDIA down another 2.5% here. Google down 2%, Amazon down 2.27%. Quite a little beat down here. Bitcoin's tried to bounce back up here from the lows of the morning, but not really hitting so well. Trying here. Now it's going positive. There you go, 109,444. So we are seeing a little bit of a flight into Bitcoin. Ethereum not as much. Gold again, profit taking here off the open, not surprising after hitting an all-time high. SPY's gapped all the way down to 63.71 here and still towards the lows of the day. See here what SPY's doing, still sliding, now down 1.4. Q's down 1.78, NASDAQ down 100, down 1.22. Dow Jones down 1.22. Let's see if there's any. We do see XLP, which is consumer staples, up about 35 basis points, and then healthcare is pretty flat. Otherwise, we see everything else opening to the downside. Technology down 2% here so far. A lot of them down 1 to 1.5%. So, again, just more and more of a hit here. VIX now up at 19.27. So my one saving grace so far has been that. Gold back 34.80. Let's see if there's any pumpers or what else we've got going on here. There's a pumper, UTHR, United Therapeutics, up 36.91%. So this is big news. So United Therapeutics, UTHR, has surged 42% after its lung disease treatment met its main goal in late stage study. So definitely good. This is for folks with idiopathic pulmonary fibrosis, a debilitating and irreversible condition characterized by stiff and scarred lung tissue, making breathing increasingly difficult. So big move up on that news there. So that's a strong move up. Healthcare, Chiotenix, another one, CYTK up. And again, they say that their heart disease drug more effective than standard of care. So again, another positive upgrade after some trials entered. IONS, another pharmaceuticals moving up. Trying to see if anything that's not a pharmaceuticals. Everything is so far pharmaceuticals that's moving to the upside. Pepsi, the only thing sort of, yeah, everything literally is healthcare. You do have, I don't know what that is, BRP. So you do have a truck manufacturing company moving to the upside. It looks like from earnings. Aftermarket on Friday. Tick is slowing down a little bit here. Qs are now moving back up off of the bottom lows of the day. So we do maybe see some buyers starting to kick in here. We have regained short-term VWAP. So now maybe we will see some buyers step in. NVIDIA below 170 here starts to get very interesting for me. I will probably be looking at trying to pick that up. Tick has gone positive. There we go. Advanced decline 47.76 though at the low of the day. Bitcoin, nice jump back above 110 here, but trying to get sold off. So crypto starting to see a little bit of love here this morning. And that's across the board. Nice jump by Solana up too. Nice recoveries from lows of the day. So crypto starting to get a little bit of love behind it. Banks getting hit pretty hard today. We see Goldman Sachs down 2.6% here. JP Morgan 1.77. Chips also getting pretty hard. Like I said, NVIDIA did bounce back above 170 here. So nice little jump back by NVIDIA. Surprised TSM isn't hit harder here, bouncing back. They had one of their chip notifications taken away. Yeah, TSMC received notification from U.S. government that here we go. That did have them down further. Let's see here. Just trying to see. Got a few things coming out. We got PMI coming out for Canada. 48.3, up from 46.1, but below that 50% level that you look for. So they're manufacturing. Canada manufacturing a little higher. We'll see what we get in the U.S. TSM coming back pretty nicely on that. Bitcoin continuing to try to move back to the upside. Tick has gone negative 200 again, so seeing a little bit. Advanced decline. So advanced decline keeps giving us a lower low. I don't like seeing that 48.50. So that keeps giving us a lower low here. Tick up, finally positive here again. Qs have been bouncing up a little bit here the last 10 minutes or so. So we are seeing a move, a little bit of a move to the upside here. Nvidia bouncing back above 170. So we are starting to see, so maybe that morning sell-off is starting to subside, and maybe now as the algos stop pushing it to the downside, maybe we see it move back to the upside. Apple down 1.2. So people are buying this dip now. So after the algos fought it out, we now see it's starting to move a little bit to the upside here. DXY pulling back down below 98.40 here. Bitcoin 110,300, so moving back to the upside. Love to see that. All the big movers outside of Pepsi. It looks like Pepsi's pulled back, so let's check that. Up 3.4, so again, seeing a sell-off there. So anything that went up, we are seeing again, it's still a buy the dip, but also sell the rip opportunity across most of these. MicroStrategy with Bitcoin moving up nicely here, back to 339.56. Still moving to the upside. Bitcoin back above 110.5 here. Very bullish on a break of 110.7 here. Anything above that could start some liquidations to the upside, a little bit of a short squeeze for us. Ron pointing out UNH holding up pretty well. Yeah, it has. It has held up nicely at that 310. It's got to break above that 325 level to get to the next one. So okay, it is 9:45. When I'm solo, we cut it off here because, as you can tell, I sort of run out of things to say after about 45 minutes. Tick is starting to move positive here. Does seem, I mean, if crypto is an indication on what you've got going, we might see a little bit of a grind up now here. It's going to be people digesting what's going on with tariffs, what's going on. Do we have to pay them back? Do we not pay them? As we start to see some more clarity there, that should help us out and tell us a little bit more. So everybody have a fantastic day. Big Beat will be back with me tomorrow morning. We'll see you all then. Thanks, Ron.